Good afternoon and a very warm welcome on Business Today Television. Ladies and gentlemen, in our ongoing coverage on fourth quarter earnings, we present to you quality managements where a very sharp rise in both year-on-year and quarter-on-quarter jump has been seen not only in the top line but also in the bottom line net profit. Apart from that, these stocks that we cover are deep in value, and in this particular extension we are now joined by the MD and CEO of Bank of India, Mr. Rajneesh Karnatak. Fourth quarter earnings for the bank and other details will keep on appearing on your screen, but just two words about the relative undervaluation of Bank of India. The price to book of Bank of India at the moment is 0.7. It's below 1, which means that at about 113, 114 rupees, the bank is trading below its book value. It just has a very simple PE of 5.25, and the dividend yield of this hugely profitable bank is at 3.7%. With this background in mind, ladies and gentlemen, let's begin our discussion with Mr. Karnatak. Namaste to you, sir, and a very warm welcome on Business Today Television. You had a stunning rise in fourth quarter profit, both year on year as well as quarter on quarter. The numbers are right in front of us. Could you please explain how this jump came about, especially in profit after tax?
Yeah, thank you so much for having here. First of all, see, we have done a very good numbers as far as our top line is concerned. So as far as our deposit growth is concerned, the global deposit growth, was in excess of 11%, and advances growth was also around 14% on a YOY basis. In fact, the domestic advance growth was nearly 14.4%. As regards the bottom line, so we had an improvement in the net interest income also. It has improved by nearly 6%. Our interest income has gone up by nearly 11%. And apart from that, our operating profit improved by nearly 17%, and our net profit has increased by 45% on a YOY basis. Besides that, if you see our non-interest income, that there also we have done good improvement, and the increase has been substantial in the non-interest income part also. All these things taken together, and also the fact that there has been improvement in the asset quality, wherein our gross NPA percentage, net NPA percentage, and our slippage ratio has come down, has overall given a result wherein our key fundamental ratios have also improved in this financial year.
Right. I'll just give you the idea on GNPA, which is gross net profit, gross non-performing assets. They are down by about 171 basis points. The number is at 21,750 crores. Net NPA is a meager 5,359 crores, down by 40 basis points. So this is how the bank has performed as far as fourth quarter is concerned. Now let's look at how the coming financial year looks to you. We are already sitting in the middle of May, Mr. Karnatak. Please tell us what is the kind of credit growth and global deposit growth you are looking at in the coming quarters.
So for this year, FY26, we are giving a guidance of deposit growth of around 11 to 12% and credit growth of around 13 to 14%. We are very much cognizant of the fact that the headwinds which are there in the global arena and the tariffs and other things which are going on. So in light of that, we are giving this current guidance of credit growth of around 13 to 14% and deposit growth of around 11 to 12%.
Okay. Mr. Karnatak, would you want to comment on the trajectory of net NPAs from now on? You've already seen a 40 basis point decrease in the fourth quarter to somewhere like 5,360 crores. What would be the trajectory? Have you been able to convert some non-performing assets into payable accounts in the quarter gone by, or have you made some recoveries?
So this quarter, so I will not be able to tell you anything about, because we have just given our audited numbers for March 25. So just for the guidance sake, I can only say that whatever the asset quality improvement we have done in FY25, the asset quality will look much better in FY26. To just put a point, I would just give a number. So our gross cash recoveries in FY25 have been to the tune of 9,500 crores, were only 7,800 crores last year. So there we have improved by nearly 1,800 crores on a YOY basis. Similarly, if you see the slippage ratio, fresh slippages, they have been contained at 7,500 crores, though it is similar to the number which was last year. However, this year it also includes one lumpy NPA which happened of around 1,000 crore of our public sector. Had it not been there, our slippage ratio and credit cost would have been much better. So the coming financial year, I can only say that our credit cost, which has come down this year by nearly 2 basis points to 0.76, will be better than this. And our slippage ratio, which has improved by nearly 22 basis points and is now at 1.38%, will be again better in FY26.
Right. Mr. Karnatak, let's look at how this very sharp 80% jump in fourth quarter profit came about. Can you tell us which were the one or two segments which were the highlights of this rise in profit and profitability at Bank of India?
So the profitability improvement in Bank of India has been across the board, basically, whether it is improvement in the income, our net interest income which has been there, whether it is with respect to the operating profit where we have given an operating profit YOY growth of 16%, or whether we have been able to improve our non-interest income. Apart from that, we have even been able to improve our cost to income ratio, wherein it has now come down to 50.84% as against earlier 51.2% in March 24. So reduction in the controllable cost and improvement in the interest income, non-interest income, and the recoveries that we have done in the NPA portfolio, all these together have resulted in the coming of the operational efficiency and improvement in the bottom lines of the bank. And the net profit for the first time in Bank of India has touched the figure of 9,000 crore plus, as against the figure of around 6,000 crore in the FY24.
Okay. When you look at the branch expansion that you've done, especially in the digital space, what have been the additions in the quarter gone by? And if you would want to elaborate on how the number of branches have increased year on year, because the final numbers were also declared.
Yeah. So on a YOY basis, if I give you a color on the branches, so we have increased the number of branches by 211 in FY25. So now we have around 5,300 global branches. Apart from that, there are 8,000 plus ATMs in the bank and 23,000 plus business correspondents are there. So if you see the touch point globally for Bank of India, we have nearly 36,000 of the 36,000 touch points, wherein we are giving various kinds of customer service. Apart from that, we have done a lot of work on the technology side, on the digital banking side. If you see our presentation also, nearly 29 products on the RAM side, retail, agriculture, MSME and liability side, wherein saving, current account and fixed deposit, 29 products are now totally digital. And if I remove the 5 liability side products, so 24 products on the RAM side, on the loan side are fully digital now. So we are getting a lot of operational efficiency also because of the digitization of so many products which have been there. And apart from that, there has been reduction in the turnaround time also while giving sanctions in the loan accounts and while opening saving and current accounts on the liability side. So all these things put together have given us a lot of operational efficiency and finally have resulted in a better profitability for the bank.
Okay. March 2025 profit after tax was 9,550 crores, Mr. Karnatak. This is a very, very sharp growth of about 50% over the same quarter, over the same year last year. What is the profit after tax you are estimating for the current financial year?
So the guidance for the profit at this juncture I will not be able to give, but definitely with the kind of numbers that we are seeing with us, the top line growth, the guidance which we are giving and the guidance which we have for our gross and net NPA, the profitability for this year FY26 will be much better than the profitability which we have shown in this financial year of FY25.
You're talking about NIM margin expansion.
So NIM margin expansion, if you specifically ask, the NIM we have closed at 2.82% as on March 25, and on a YOY basis it has come down by only 15 basis points. And if you see our domestic NIM, it is at a very healthy number at 3.10%. Since we have an international book of around 12%, the banks which have international books, normally their global NIM is on a lower side. And as I said, and if I repeat myself, my domestic NIM is around 3.10%. And with already the repo cut which has already happened twice in this calendar year, 25 basis point in February and 25 basis point in April, we feel that the deposit side transmission should happen in the next 6 to 8 months, wherein majority of the deposits will get repriced, wherein if you see normally the deposits are mostly of 6 months, 9 months and 1 year. And our present cost of deposit is only 4.90%, and once the transmission of this repo rate cut happens on the deposit side, we are sure that this cost of deposit will come down further for us, and then the NIMs will stabilize, and we will be able to give a stabilized NIM at somewhere around 2.70 to 2.75% on a global side for FY26.
Okay. I was looking at the other income component, Mr. Karnatak. There seems to be a massive surge here. This is treasury income related to your bond portfolio, right?
Right.
Okay. Ladies and gentlemen, once interest rates fall, because a lot of public sector banks hold government securities as a part of their CRR and SLR initiatives, they make tons and tons of money on the revaluation of their bond portfolio, and that's the reason why other income has surged. Mr. Karnatak, you hope of maybe 1 or 2 rate cuts in the coming year as well?
So yes, our non-interest income has improved. As you see, it has gone up substantially, mainly because of 2 reasons. One is the treasury income where we had, and we have done a very good portfolio as far as the treasury is there. When the rate of interest were high, we did accumulate some of the bonds and other instruments which were there, and which we are now able to sell as per the RBI guidelines up to the 5% of the HTM. There we are trying to make profits, and this is the profit which is there in the non-interest income. And this year also, in this financial year also, wherever we have kept ourselves with some good papers, we will be selling them off within the RBI guidelines and making profit out of that. And the another major portion of the profit is the recovery from the return of accounts. There also, if you see in our presentation, nearly 61% jump has been there in the recovery from the return of accounts. So this year also we are expecting that we will get good non-interest income in FY26 also, which will help us in improving our operating profit overall and the net profit. As regards further rate cuts are concerned, what we read from the commentary and various economists which are writing down that there is a possibility of 1 more rate cut or a few more rate cuts in this financial year also. So let's hope, and as and when it comes, definitely it will bring down the obviously the cost of deposits once the transmission happens.
Okay. Mr. Karnatak, we'll now focus on the stock price. I'll request the PCR to kindly show us the comparative structure of Bank of India versus the BSE BankX and the mid cap index right there in front of you. Kindly ignore the last 1 year performance because we've had a correction in all PSU stocks and Bank of India was no exception. But look at the 5-year CAGR and the 3-year CAGR. It is very, very handsomely outperformed both the BSE BankX and the BSE Mid Cap Index. In 3 years each year, Bank of India has appreciated by 36%, and in 5 years each year, the bank has appreciated 27%. So that's a nice multi-bagger outfit that you have so far. These are the numbers right there in front of you. Mr. Karnatak, why is the bank, despite such a surge in profit and profitability, and trying to hit that 10,000 crore barrier on annual net profit, has a PE of just 6 and a price to book of not even 1? What do you think are the markets missing?
So as regards the pricing is concerned, see, one thing is there, our book value is now touched 148 rupees.
Yes.
Right? And our earning per share is also above 5 rupees as on the March 25 balance sheet. Dividend also we have declared at 4.05%. So as far as the top management of the bank is concerned, see, we are very much concentrating on the process which is there within the bank to make the bank more operationally profit and the bank to be a robust bank. So we are working on the top line of the bank so that the robust growth on deposit and advances is there. We are working on the operating profit and also on the net profit of the bank. And we are also working from the top management side on the all critical ratios which are there which need to be improved. So that process has already started and we are very much working on that. As regards the market price is concerned, it is best left to the market. We are clearly focusing on our controllable things, which are to give good numbers to the market, whether it is top line, bottom line, or with the key fundamental ratios which are there.
Okay. Would you be needing capital in the coming year? There was, I think, a very well subscribed preferential offer about 3 years ago at 120 rupees. What is the requirement for capital at this stage? Are you meeting it through internal resources, through CASA, through others?
Yeah, so as regards capital is concerned, see, we came out with a QIP in December 2023, wherein our issue was subscribed by more than 6 times, right? And presently, if you see, we have no board approval we have taken for any further QIP in this financial year as on date, because for the simple reason that our CRAR is at a healthy 17.77% as on March 25, as against the prescribed number of 11.5 of the RBI guidelines. Our CET1 is also at a very healthy number of 14% plus. So this year from the board approval side, we have taken an approval of raising around 5,000 crore of Tier 1 and Tier 2 capital together, aggregating 5,000 crore both together. And for QIP, we have no presently requirement and neither we have any board approval for that. And as regards the government shareholding, we are again below the 75% government shareholding, which is as per the SEBI guidelines. So presently there is no need of going to the market for raising fresh capital.
Okay, fair point. And yes, 73.3% is held by Government of India, so you don't fall in that ambit where the GOI has to reduce its stake mainly because of the SEBI regulation. When you look at your lending portfolio, Mr. Karnatak, could you pinpoint any geographies where, domestic geographies where more demand for credit or loans is coming? And in terms of sectors, where is the maximum growth?
Yeah, so as regards geography is concerned, see, Bank of India is a bank which is present across the country. We are present in all the states, in all the districts in the country. So our growth, if you see, it has been agnostic to any particular geography, north, south, east, west, or any particular state. So we have grown across the board. In fact, if you see our global book, 12% of our book is international, remaining 88% of the book is a domestic book, and it is growing agnostic to any particular geography. As regards particular segment within the loan book, there I can say that our RAM book, which is the retail, MSME and agriculture book, that is growing at a very healthy pace of around 18%. Within retail is growing at a YOY number of around 20%. MSME is growing at around 18% and agriculture is also growing at a healthy number of around 16%. So there we are seeing a very good traction which is coming. Among the corporate book, again this year we have grown at around 9.5%. And this year for FY26, we are confident that the corporate book will also grow at a double digit of 10% plus.
Okay, let me just highlight the overall growth in the RAM segment, which is retail, agriculture and MSME. It grew 18.4% year on year to somewhere like 3,22,673 crore rupees in Q4. This number is correct, Mr. Karnatak?
Yeah, so our RAM book is, yes, these numbers are correct. 3.22 lakh crores is our total RAM book, wherein maximum is from the retail book, which is around 1.33 lakh crores.
Okay, and that itself grew 20%.
Yeah, that has grown at around, total RAM book has grown at around 18% on a YOY.
Yes, okay. And within that, retail is grown up by 20, agriculture by 16.3.
Yeah, 16 plus, agriculture has grown at 16% plus, and MSME has grown at 18% plus.
Okay. With that, Mr. Karnatak, thank you so much for your time. As always, it's illuminating listening to how lenders are working at this point of time and what are their expectations on the credit cycle, as also the interest rate cycle. Thank you so much, and here's wishing you all the best. Next time we meet, let's hope that profit, which has shown a 50% growth year on year, rises dramatically faster and you hit 15,000 crores on the bottom line.
Thank you so much. Thank you.
That, ladies and gentlemen, was Mr. Rajneesh Karnatak, CEO and MD of Bank of India, a stock which is extremely undervalued. the company, the bank has done extremely well in the fourth quarter earnings. You will not believe it has a simple PE of 5.6, much below, in fact multiple times below the PE of the Nifty, of the Bank Nifty, and of course the BSE, the NSE PSU Banking Index. It's trading at a book value of 0.7. The book value is 148, the stock price is 113, and even at this level it has a dividend yield of about 3.78%. With that, we'll pause for a moment, but news continues.